are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, looking at charts, news, information, breaking it all down, giving you some analysis from the veteran coaches over here at Tackle Trading so you can better run your daily routine as a trader. And welcome out to our show here on a Friday. If you're joining the channel, if you're a veteran, you know what I'm going to ask for right now. Hashtag Team Tackle right in the chat. Let's start the conversation. Have a good one to end the week. Got a long 3-day weekend in front of us, so breaking down the market action, get prepared for next week as well, and enjoy the weekend. Kind of on the last trading day of the week, we had jobs data come out this morning. The Fed has been saying this is the most important report between now and September 21st. The market has kind of been interpreting that. Market didn't respond too much to it. We're going to get Coach Matt's take on the data itself. We'll talk a little bit about the price response as well. And let's bring these coaches in one at a time and start our show. Coach Frank is back for his regular appearance on Friday. How are you doing today, sir?
Excited to be here. Excited to be here. No complaints on my end. We're a week away from football season. The market's behaving, right? We got a 3-day weekend coming up. I mean, what is there to complain about?
I agree 100%. It is my favorite time of the year. Football season starting. The air is turning just a little bit. Still very
cool
nice
mornings
outside, though. Cool mornings, wonderful afternoons. I'm enjoying it. And markets are kind of just hanging out up here in a nice, beautiful, bullish run. Matt, how you doing today, sir?
I am doing personally fantastic, but what to complain about? Let me think about the 500,000 miss on the jobs data. Let's start with that one.
Well, there's actual real world things we can tell.
Oh, okay. Yeah, you're not talking about the fake stuff. Oh,
No,
okay. We're good then. We're good then.
Right. We're just talking about pleasantries. Absolutely.
Oh, yeah,
hey, have you seen the weather?
Doing amazing. Labor market numbers are fantastic. Everybody's good. Life's fantastic. Let's go.
Rose-colored glasses, I guess.
Yep.
Let's get down to it. By the way, we got Coach Cody joining us as well. You know, Cody's been in transit a little bit lately, moving back to Texas from his home in Hawaii. And I know that he's excited to be here. We're excited to have you here. It's been a bit, Cody. How long has it been since we had you on the show?
Since I've been on the show, intermittently, I've been on, but for the full, probably a good year that I think I've been like fully on the show. Glad to be back though.
Man, it's great to have you here on a Friday. I know that we're going to get some of your takes. And Frank, I got a question for you before we get started. Have you done your scanning yet for the weekend?
I have. And there's, as always, there's some interesting things out there. There's a few things that are going to need another week or two in the market. It's a pretty broad offering as far as what it is. The one thing I didn't find a lot of was pure reversal plays that seemed like they didn't work out or they're rolling already. So I was kind of interested. I always am looking for at least one or two kind of early reversal candidates. And I didn't really find anything that stood out to me on that end, but you're seeing some breakouts. You're seeing some developing pullbacks that might need a little bit of time. Finance, a little bit weaker than maybe you would like to have seen. It kind of messed with some of the charts in the space overall, not dramatically, but the pullbacks aren't quite as shallow or as clean as I would like them to do. But there's definitely some interesting things. And I've got a few charts I'm real excited to talk about with the team today.
Yeah, I know that we always highlight several of your favorite charts during Coach Frank's charts here on a Friday. It's a very popular segment. Matt, you've also done your scanning. Are you seeing some interesting stuff out there just for the weekend reports?
Yeah, I have done a majority of my scanning. I will update it as we get into closer to the market close. But yeah, I'm finding some interesting candidates, but like Frank says, some of the charts need a little bit of time to kind of solidify themselves. But yeah, I'm looking at plays in materials, comms, technology, finance. Frank's absolutely right, especially today's candle, Frankie. If you would have saw a little bit of an upward movement in price today, you would have had some potential trades, I think, set up. But with this slight downward movement today, and then you're testing that 38 zone, it's probably going to take another few days. So not a lot of great trades in finance right now, but I do think a little bit of time goes on, the sector itself will solidify itself. So not so much in finance, but absolutely there's some really good trades and interesting breakout candidates at the top, but you're always going to find interesting breakout candidates at the top when the market's clinging towards the all-time high. What I have found interesting, though, and what I've been debating internally with myself is the interesting reversal candidates that I've been seeing from in multiple sectors, and quite frankly, the basic materials sector really comes to mind there.
Yeah, it's kind of like the second leg of those reversals, right? And things like in some of the chemical companies in particular, but some of the metals companies too. I would agree. You're seeing those reversals and not the early reversals, right? At least that's what I found. I didn't find any like, oh, these guys are just starting that that reversal.
Yeah, and we'll get into it when we get into sectors, and we'll get into it when we get into commodities and talk about gold. But very interesting candidates there, no doubt about it.
For sure.
Well, let's get into it right now. And by the way, if you're out there watching the show, one thing I always love to see is those thumbs up. Help us get the analytics up on the show. Definitely, gets the numbers up and gets new people into our community here, which is what we like. Let's get down to technical analysis, Matt. There on the intraday chart, you see it from after the initial early surge on Monday. The market really has been just kind of meandering sideways to up throughout the week, a little bit back and forth. We tried to test a breakout actually earlier this morning. We're now back down in a range. What are you seeing in the technicals here on the S&P?
Well, technically, I think you're still kind of stuck in that range that you've been looking at the previous 3 trading sessions, right there between this 45.15, 45.20 area, and then the top end of the range right there between 45.40 and 45.45. You can kind of see now the ding at 45.50 that kind of puts that technicals into the range of analysis, no doubt about that. But over the course of the last week, you're really just seeing this tight range. And even on a day where the labor market numbers came out, and we'll talk about them here in just a second, still stuck in that range. And on a day where you have labor market numbers that absolutely would have supported some type of price movement, whether that was up or down on the hot take analysis, it absolutely had the ability to break this out of the range, and it just didn't. Market's still kind of stuck in neutral right now. And honestly, after giving it an hour or a few hours to really kind of think about those labor market numbers, it's a difficult read on what the Fed's going to do with it.
Well, let's talk about him. Go ahead.
I was just going to say, it feels like a punt, right? We're going into a 3-day weekend. I don't want to have to make a decision. Feels like the market's like, we'll just let this one hang out and we'll think about it and get back to business next Tuesday.
Well, I can only tell you how I personally went through the numbers today, and let's just give kind of the information here. Labor market numbers came out today, and labor market showed a negative print, well, positive data, but negative against the expectation. The expectation was 720,000 jobs. It came in at a woeful 235,000 jobs. You also had revisions upward for both June and July for a net gain of over, I believe, 130,000 jobs. And so that offsets some of the negative data. And then when you look into the detail of the actual report, you'll see that the actual unemployment number came in at 5.2%, which was the expectation. Hourly earnings went up 0.3%. The expectation was 0.3. It came in at 0.6%. And so that data was very strong. And so the headline number of 235,000 jobs versus the expectation of 720 is very negative. You look into the underneath, and you really kind of see where the damage is. When you look at this from a sector perspective, an industrial perspective, and you look at the material space, you look at the discretionary space, you look at the technology space and the financial space, not a lot of discernible differences in the data from June, July to August. The difference here this month is leisure and hospitality. Leisure and hospitality has been leading the charge from a labor market perspective. That industry has been coming back more and more and more. And then this month, again, we missed by about 500,000?
Yep.
A big time miss. Well, all of that miss rested squarely on the shoulders of leisure and hospitality that came in basically flat from last month to this month. And we're talking about hundreds of thousands of jobs there. And so obviously the Delta variant and COVID having an impact on leisure and hospitality. And again, a lot of leisure and hospitality is seasonal work. And so there's a lot of analysis. And this is where, Frank, I love your punt comment, because the way I felt about it was I wanted to punt to give me a little bit more time to think about and dive into the numbers and have those 3 days to kind of assess what the Fed is going to do with it. And so, yeah, it's one of those situations where the headline number is really nasty, that obviously you see that headline number and you immediately think the Fed is also going to punt on tapering to maybe October or November. But the more I've thought about it over the last hour, I've came back to the same conclusion. Is I still feel the Fed is going to continue to march on towards the tapering decision coming in 2.5 weeks from now.
Yeah, and that's where I'm leaning as well, Matt. And we've been talking about it all morning, obviously. And you even called me this morning. You're like, hey, you see the jobs data? I'm like, oh, no, I haven't seen it yet. And we start going through the numbers and discussing it. And yes, the headline prints, they lead you to asking a lot of questions immediately, like, oh, what does this mean? How are they going to interpret the data? 235,000 jobs instead of 720. You go underneath the surface, you see some mixed data points like the upward revisions through the summer that you just mentioned. It leads me to believe that the Fed is online to do what they were planning to do to begin with. But it does at least crack the door open for some mixed analysis. And I'm going to think through that, quite frankly, over the weekend, and also try to come to any other conclusions I can if there's other things to kind of noodle through. But I'm on the same page right now that I think the Fed is going to continue on their current path.
Yeah, and obviously we need to hear from the Fed following the unemployment report, and I guarantee they're going to be like, "Oh, we're still looking at data. We're still looking at data. We want some time to process this." And you just know how the Fed punts on every conversation that they ever have. But at the end of the day, I still believe that the Fed has already written the speech for September 20th.
Sure.
And I'm not sure they want to adjust that yet.
I'm not sure they do either. All right. Well, that was the big news of the day, obviously, and the market brought it back down into the range. It's going to be a punt for the 3-day weekend, most likely, Frank, setting up some stuff for Tuesday for potential high base breakouts.
You know what might not have a punt? Something
Bitcoin?
that doesn't sleep over the weekend.
Bitcoin may not punt.
Bitcoin may not punt.
No, in fact, we've been talking about this. The Bitcoin breakout. I mean, you guys are talking about potential. I honestly think this is one of the best opportunities in the market right now, personally.
It's a great looking chart.
I'm loving what's going on in cryptocurrency heading into the weekend, and it does not sleep. It does not sleep. We'll break down Bitcoin here in just a minute. Matt, let's flash through the indexes, then sectors as well here. Kind of just give me a read on what you're seeing.
Yeah, quick read. Again, you're just looking at a little bit of short-term stagnation, excuse me, from a overall price response this week. Had a nice little breakout on Monday, then just simply consolidation. The 9 EMA is still catching up. Again, following a breakout, you definitely want to see a little bit more umped here, Frank. Wouldn't you agree?
Yeah, it would be ideal. It hasn't done anything wrong, but it hasn't done anything right. It hasn't really inspired that confidence, right? That even just one more day of popping,
one more day would have
went a long way to confidence. Yeah, I would agree.
Yeah, but again, the lack of upward movement in price, you haven't had anything downward movement either. And so you certainly could look at this as a glass half full versus a glass half empty scenario. And whenever you're talking about an underlying bull market in a trend like this, I'm always going to see the market as a glass half full type scenario where I'm looking at that potential breakout. And so the S&P took a little bit of a nap on the back half of this week following the breakout on Monday. When you're looking at some of the other market indexes, the NASDAQ, is probably one S&P, one B right now. But again, you see a very similar breakout, continuation, consolidation, waiting for that 9 EMA to catch up to it. You break this down on a 30-minute chart, you see the same type of stagnation from a neutrality perspective in the S&P that you've been seeing in the in the NASDAQ that you've been seeing in the S&P. Still waiting on that continuation on the breakout from Monday. You're looking at that 15,700 level right there for continuation analysis on the NASDAQ. I do see some opportunity in the NASDAQ, both from an index perspective. You got to like the momentum behind it from a trend perspective. But some of those charts are starting to solidify themselves as well. We'll definitely take a look at the NASDAQ later in the scouting report meeting as well. And then when you're taking a look at the Dow Jones, still stuck in that range, looking for a potential breakout. You see the price response to the labor market numbers. Again, this is why traders are anticipating these types of things. Obviously, the response was negative, put us right back down into the ranges. But again, a positive print today, nice little breakout. Could have happened, didn't happen, but we're still looking at that breakout at 35,500 for continuation. And then when you're looking at the Russell 2000, the question it has not been in the box type analysis for the Russell 2000. You're looking at the current momentum of the current trend, which is, let me eliminate my boxes to clear this up a little bit. You're looking at the current momentum of this trend here against the backdrop of the neutrality that's been happening over the last 7 to 8 months. I like the momentum that is starting to happen in the Russell 2000. Really like that bear stop out day candle there. And now you're seeing the momentum shift a little bit up, and even over the last couple days, whereas the S&P, the Dow Jones, and the NASDAQ all stuck in that little range over the last 4 days. You see the Russell 2000? That's a higher level of resistance. You got to like that. You got to like the beginnings here, but you're still looking at that major resistance there. And so you don't want to, it's not one of those things where you want to front run aggressively in any capacity here, but you guys start looking at this area of the market. And if the market does start to solidify itself up north of 2300 coming into that potential breakout, and you get a little consolidation between the before the 2350 breakout, I think you got to be looking at the Russell 2000 there.
It's been one of the better performers over the last couple of weeks. And I really loved the way that you and Tyler broke that down off the 200 moving average, not only 2 weeks ago, but even this week as it's developing. So it feels destined, like it wants to touch those highs and test those highs. Now, what it does there, maybe it consolidates, maybe it just breaks. I don't know, but it feels destined to that in that short-term analysis. I'm with you. Frankie, what about you on the Russell?
Yeah, I mean, page? I think with the Russell, you assume it's not going to break out, but you prepare for what your actions will be if it does. Right. No matter what the Russell, how it's got to support or resistance lately, it's always held right on both sides of it. So yes. I think whenever you get towards the edges, you start to think, okay, if this thing does break out, what does that mean for me? But like Maddie said, this is not the type of chart that you want to front run the breakout. I think the odds are we see profit taking at resistance, and then we decide from there. And if I had to bet blind, and luckily we don't have to do this as traders, I'd bet on what's been happening to keep happening, right? History is on my side for that bet. But I always love when a chart is at the edges, at support or resistance, because that is where we can start prepping those breakout game plans, right?
Yeah, and it for me, it's not about maximizing the return by front running a potential breakout when that breakout has been beat up multiple different times, right? It's about the opportunity that does exist if the breakout occurs. And so I because you're talking about an index that's been underperforming the rest of the broad market for now 8 months. For 8 months, you're talking about an index that can absolutely fly when it wants to fly. And so you could see a little bit of catch up here in the Russell 2000. I'm not calling this shot by no means. Again, I just said this isn't front running at all. It's just a matter of getting prepared to see if it does occur. And then if it's one of those scenarios where if A, then B. If A, we get the opportunity for the breakout, then all of the analysis that's been happening in the last 2 weeks, from the bounce at 2100 to the reclaiming of the 50-day moving average to the momentum against the market, right? All of that analysis just leads you to the opportunity. You still got to wait to see that opportunity, though, is my point.
Yep. And even if you don't feel it, whatever you feel, I think it is, I think it isn't, right? We're all entitled to our opinions. We want to be ready, because if this thing does break out, that's a pretty good breakout. We want to have our game plan in place ahead of time. We'll have no reason not to, right? We've had a year plus to decide what we would like to do, whether we're talking about trades, managing condors, whatever. We've had a lot of time to think it through. So that's really, I think, a good point there, Maddie, is being ready, right? Being ready for it if it does break out. I mean, eventually, one way or the other, we will break out on the rut, right? Correct. Whether it's on the top end this time around or 3 months from now where we break support, and it'll be a good trading opportunity, in my opinion, whenever it happens.
Yep. And I agree with Frank. If you're looking at this blindly, yeah, you bet for resistance to hold here. But eventually it breaks.
Sooner or later.
Yeah, gotcha. It's one that I think we're all going to keep on the radar, though, because 8-month consolidations, that if they do break, I think everybody loves that on any major stock or product. So I love the analysis, guys. All right, let's move into sectors here real quick, Matt. And actually, I got a couple of questions around the defensive sectors when you're ready, but wherever you want to start. Well, really, I'm seeing performance there this week. I mean, utilities is pushing up towards another breakout. I know it kind of paused a week ago. Staples has come back up, pushing up towards its breakout channel as well. Are we looking at upgrades in some of these areas, anticipating this, or where's your head on this?
Well, you take a look at utilities, and you got to respect. You take a look at Staples, and you got to respect the week that Staples has had. It held support, and now you're back up into resistance. But the question is, does it change the overall nature of the trend? Does it change the overall nature of the pattern? That's the question you have. And so I look forward to the debate. For me, when you're looking at staples, and I believe the ranking on staples right now is 35.
Mm-hmm.
Okay. For me, this is a 35 chart.
Mm-hmm.
And so it really doesn't change the overall dynamic. You got to like the fact that support held, because it could have got ugly, but I don't think you upgrade simply because it could have got ugly and it didn't.
Mm-hmm.
And so I still think you got a little concern at the double top action over here. Resistance did hold just yesterday as well at that same level. You're a little bit overextended coming into that potential breakout. Yeah, for me, again, if you broke out, I do think you have to upgrade. But because resistance did hold, you're a little bit overextended. The trend is very similar to me. I would like it a heck of a lot better after a week in consolidation and then a breakout. So I would argue for no upgrade in staples.
Yeah, I would echo that. It's one of those, I really like the chart, but I don't think it did enough to upgrade, right? It's one of those for me. I would agree with your take, Matty.
Waiting for resistance. Yeah.
Again, you like it better this week than you did
like
last week because you had concern last week. You don't have that concern this week. And yeah, your confidence is building in this space as well. But that's different from an upgrade. Upgrade has to have technicals that support it. And right now you're just a little in front of that.
Gotcha. And there's several sectors actually looking like they may be pushing towards breakouts, by the way. What is grabbing your attention?
Well, in utilities, you're looking at a 25 ranking on utilities right now as well. And so again, would you upgrade utilities after a 2-day price performance where it just drilled into resistance? And I don't know. I kind of feel like the 25 ranking is the accurate ranking that utilities should have. So I doubt I would upgrade there either.
Gotcha. What sectors are you guys looking at most this next week? I mean, obviously I like the staples. I think you got to be anticipating it a little bit. I'm fair with the no upgrade. I think the analysis is dead on, but I am getting a little bit more, positive towards that sector, I should say. Industrials looks like it wants to break out, but tech is still in that high base up there. What's grabbing you guys' attention, Frank? Anything, Mark or Matt?
The growth areas as a whole, the comms, although comms are always so weird. I have such a hard time with XLC because of how weighted it is. That I've complained about that since it became a thing, right? But some of the stocks within that space, even the discretionary sector has, the ETF has started to clean up a little bit. Tech really jumps out. I mean, whenever you see tech threatening a breakout, and semiconductors are also doing that, SMH is kind of knocking right there on the door. That is always something that catches my eye. I'm very much that guy. The tech goes with semis. If semis are playing ball, it's a lot easier to roll. So that's probably the sector that really jumped out to me personally. I'm with Matt, though. There are a lot of really interesting things in materials too. I thought on the cyclical side of things, particularly some of those chemicals, we'll probably talk about at least one or two of them before we're done here today. Those areas have really, really stood out to me. Energy is, I don't know about you, Matt, but it's one of those that it's still very much in the middle, right? I don't think, it's just there's reasons to maybe start to like it, but not enough to actually start to like it is kind of how I felt as I was going through all those energy stocks.
That's kind of a 40 ranking, right? I mean, you described a 40 ranking. Like, I kind of like it, but I'd like it a lot more if it broke out of $50. And that's where the analysis on the 40 ranking is. So when I look at the aggressive growth areas of the market, and once again, that's discretionary, comms, and technology. First and foremost, you got to start with, where were you from a ranking perspective last week? Well, last week we were at 15 on technology. It was our highest ranked sector in the market as ranked by our tackle trading coaches. Has the trend and the pattern changed dramatically this week to adjust that ranking as the highest ranking at tackle trading? I don't believe so. We had a nice little pop on Monday. We consolidated right underneath 160. I really like this sector from a trading perspective, but only once it breaks out of 160. And so I think the 15 ranking at tackle trading is actually very accurate. It's a very consistent area of the market. You got to like the consistency of this area. Semis are starting to solidify themselves, and especially semiconductor companies and not the semiconductor equipment companies. you're starting to finally, and I say finally, but let me say it again, you're finally starting to see amazing companies like Taiwan Semiconductor starting to fire off and starting to break out of, short-term neutral conditions. And so, yeah, Frankie, when you're looking at the semiconductors, and we can take a look at SMH here, nice little high base scenario waiting for that 9 EMA to catch up. You look at Taiwan starting to solidify itself. NVIDIA here is firing off that 9 EMA as well for a potential trade there. You also have other stocks that are starting to solidify themselves in the semiconductor space as well. And so, again, from a ranking perspective, I feel the ranking is very accurate. But again, I like this space going into next week. But did the trend change? Did the pattern change? No, you're seeing a very similar high base here with a breakout. You're seeing a very similar high base here with a potential breakout. And so with technology, I certainly feel because of the consolidation and the consistency of the high base, there is a lot of potential trades here, no doubt about that. When you look at comms, love the price action you're seeing here in comms. Nice little breakout, higher high, flag-based pattern in there. You got to like what you're seeing in comms. But again, from a ranking perspective, we really didn't see anything change this week. The breakout occurred on Friday. That was in our rankings from last week. You saw the higher high play out, and then you're seeing the flag play out. This is a very consistent technical movement in the market for communications. Last week, comms was at the 20 handle, right behind technology. And the question I would have for all the coaches is, has the price action in comms this week given you enough confidence to put that in line with, say, technology, when in comms, it's just a different beast. You have Facebook and Google really solidifying themselves. Comcast looks pretty good. Disney's starting to solidify itself. But you have a lot of industries that are not correlated in comms versus technology. Everything is almost correlated to one another in technology. And so comms is just one of those weird sectors where you have some growth and you have some value and then some mixed analysis in between. And so and again, this is the question I have, does the quality of the type of flag we're seeing in Facebook, does the quality of the type of high base flag we're seeing in Google and the momentum we're seeing in Google, does that quality of analysis and does that confidence we're seeing in these types of technicals, does that give you confidence in the sector itself when this sector is so diversified from a type of industry? And I'm not sure. I still kind of have a feeling that technology is slightly more, people are slightly more confident in tech, especially with semiconductors starting to solidify themselves than they are with communications.
I'd echo that absolutely. If I had to blindly take 10 trades in either sector, just any of the names, but I just draw them out of a hat, I would feel a lot more confident with 10 random tech names than 10 random communication names. Not to say there's not some great names. I mean, Comcast was awesome this week, and I can definitely see some interesting development on the bigs, the Facebook and the Google. But for me, it's pretty easy. Tech, in my head, has to be above XLC, in my opinion.
I certainly second that, especially when you look at the longer term trends as well, and you take anything into account from a longer term perspective. And then when you take a look at the last growth based sector, that is discretionary. I certainly respect the short term momentum, but I still got this in a little bit of wider range neutrality. It did fight against a breakout this week, kind of got held amongst the breakout channel. The current ranking on discretionary is 40. Again, I like it more this week than I did last week, but I still feel this is a 40 sector until it breaks out.
I would 100% agree with that. I have more faith in it breaking out this week, but it hasn't broke out. That is the epitome of a 40 chart to me. So,
and honestly, when you scan this sector, that's what you're going to find. You're going to find some potential, but what you're going to come away with is, but if it just cooks for another 3 to 4 days, this would be really good. Right. And so it's just one of those scenarios there with the discretionary space. When you look at the cyclical areas of the market, we talked about energy. Energy looks very, very good above 50, looks like a little choppy mess between the 200-day and the 50-day moving average. It's one of those scenarios where you like it because of crude oil and you like it because of the long-term nature of dividend plays and cash flow in energy. But from a directional perspective, you don't like much here until it does break out of 50. When it does, and I do believe it will eventually, but when it does break out of 50, I think that's where you're looking directionally here. Yep. Frank?
Yeah, absolutely. Especially, I really love that we fired back off of this weekly low. So we've got a higher low that we can start to work with. We're going to have, 50. That's a big old number. Couple resistance tests, the 50-day moving average. There's a lot at 50 that's going to make it pretty easy, I think, if we break it, for us all to kind of be like, okay, that's a bullish signal, right? People are going to interpret that differently, but I think they'll all be on the same page that it is a bullish signal, and get rid of a lot of those maybe cumbersome bears that might still be, clawing in on this thing.
And Frankie, we talk about the more time, and sometimes you get more time and it actually makes the setup a little better. We like the breakout potential here. We like the breakout potential here. Yep, but you only like it because when you visually look at the breakout, you're like, well, what's it going to do? It's going to go to that blue line and come right back down, right? You like it. You don't love it. But if you give a little consolidation between the 200 and that 50-day moving average, all of a sudden you break out of that, and the visual you're looking left of the chart is not some vertical line coming down that's going to stop it. That's actually going to be supporting evidence. When you look at the left of the chart, you don't see nearly as much chop on that potential breakout than you would when you're looking at that potential breakout. And so the visual just looks so much better here. And from a technical perspective, I do think that matters. I certainly think that matters. And so I like it, but again, I only love it if you actually break out of 50. And again, the 50-day moving average plus that horizontal 50 significant whole number as well. And so, yeah, like energy, like it a lot more if we see a breakout there. Industrials just kind of stuck in mud. It's been stuck in mud for quite some time. There's a few charts setting up over there in the industrial sector, not a lot. I am looking forward to discussing a couple like GFL and RHI and VRT, but again, I do think a lot of this is just waiting on that weekly chart to finally do something. Do something.
I would agree. Kind of last week, I was thinking that if you wanted to play comms, you played XLC. And this week, I'm kind of thinking if you want to play industrials, obviously you're waiting for the break. But I think this is the vehicle that has my interest. If we do break, I usually am more of a stock guy, but there are certainly times where it just seems like the ETF is the play. And to me, this
could be industrials.
Times. Obviously we haven't broke yet, and so let's not get ahead of ourselves. But if we do break out, I could see myself being very interested in playing XLI on a breakout.
Yeah, and again, when we talked a little bit about materials just a little bit ago, but technically you're kind of from a sector perspective stuck in mud a little bit. I like some of the bottoming action in the material space, such as GDX. We've talked about that over the last couple weeks with gold firing off here today. You're seeing GDX also confirm its potential reversal. A lot of stocks like, Barrick Gold firing off head and shoulder short-term reversals, Newmont Mining firing off short-term reversals, KL firing off short-term reversals. And so you got a lot of action there, but again, we've been discussing the opportunity in GDX over the last week. Gold firing off gives a little bit of supporting evidence to that gold chart. And once again, the argument on gold versus GDX was going to play catch up. Again, on a day where we're breaking out, gold up about slightly over a point. What's GDX doing? It is playing catch up. Up to up over 2.5% here today. So far so good in that, and I'm willing to bet you'll have one of those gold charts, maybe even a silver chart.
There might be a silver chart too.
Maybe even a silver one on the scan report on the Skyline report, either the stock or the options report this week. But gotta like some of the evidence that is building on the reversal. And again, Frankie, I don't think this is first stage reversal. I think this is second stage reversal.
Right. Yep.
Right, where you have confirmation. And then when you look at the defensive areas of the market, staples we talked about. You got to like what's happened this week. It has solidified the current trend, but I don't think it changed the current trend or the current pattern. I like the ranking there. Healthcare was one of our highest rated sectors for a long time. Got a downgrade due to slowing momentum last week. I still think you're in that exact same ranking though. You like support holding, especially 2 days ago, but you're still stuck in a little bit of a cup and handle type short-term consolidation pattern. 20 ranking on healthcare makes some sense, especially given the backdrop of the bullish trend from March all the way through August. But the continuation is real here. Continuation starts for me with a breakout. You're looking at this as a breakout, but you're not looking at upgrading that from a sector perspective this week. Again, kind of real accurate rankings from last week, quite frankly. And then when you're looking at the utility space, already talked about it, you like the solidification, but once again, nothing really changed from a momentum or trend perspective, in my opinion. And then when you take a look at the last one, real estate. Real estate was one of our lower rated defensive sectors, coming in at 30. I absolutely got to appreciate the breakout here. We downgraded last week given the fact that it was stuck in mud, waiting on the breakout, kind of what you're looking at in healthcare and some of those other defensive areas. Well, if you're looking at what that breakout looks like in staples or in healthcare, you're looking at real estate as an example of it. Once it broke out, there's the momentum behind it. Real estate certainly looks like an upgrade.
Yeah, definitely. It's had a nice week there. All right. I appreciate the thorough rundown there, guys, and all your thoughts. We're going to be putting our scouting reports together here on Friday and Saturday. Obviously, we release those to pro members. Keep an eye out for that newsletter. It's a great way to really prepare yourself for the week, and we'll get you updated rankings on all these different sectors. All right, let's flash you a couple of commodities real quick. I know we only got a couple of stock items to round up, and then we got to give the people what they want here at some point today. Coach Frank's charts. I even saw a couple comments in the chat. They want the charts. They're not hammering for it, Frank, but they're just excited for it here today.
Way to throw some cold water on it, Tim.
Frank, they can't wait, Frank.
They like me. They really like me. There's like one or two people in there who don't mind it.
And Tim's like, they kind of like you.
No, they want it. They love it. All right, crude oil first. You guys talked about the energy sector. Obviously, it's been pushing towards a potential breakout here. Matt, breakout just puts you back up, testing other parts of this range. Do you still see this just in consolidation? What's your eye on here on crude?
I honestly don't have much interest in crude.
Yeah. Frankie, what about you?
Yeah, I mean, it's one of those that every week it might look a little bit different, but every week I feel the same way about it. If you're day trading it, great. I have no objection to that. If you're trying to swing trade it, I mean, there's just, say you win the battle at the 50, right? Mm-hmm. Which is an interesting entry, in my opinion. That there's, I think, an interesting entry discussion from a swing trading point of view to have on crude, taking out this 2-day top and the 50-day moving average. But then where do we go?
72, then 73, then 74, then 75. And if you break it down to intraday, you got 72 and a half and 73.80. No,
exactly. Yeah. And so
it's in the box. It's just in the box.
It's in the box. It's in the box. You find ways to keep it interesting so you keep following it. But at the end of the day, you always end it with it's in the box.
Still in the box.
And yeah.
One product that may not be in the box here, if it continues its upward movement, is gold. You guys already highlighted that you're interested in some of the gold reversals. Gold miners are looking good. I know we're going to have some candidates. Matt, box ends at what, 1840 here for us? We're pushing resistance right now. What's your read?
Yeah.
Well, you gotta like the breakout here. There's no doubt about it. But where does the breakout go? Again, this is why boxes are important. Breakout goes right to the previous level of resistance. Start to show some intraday weakness at that point. And again, it has that opportunity though. It has an opportunity. But even on the breakout, I still like GDX more.
Yeah, I do too.
I would agree with that.
I do too. Bitcoin, last one here. I'll tell you, we started the show actually with some commentary on this one. I am eagerly anticipating this weekend with Bitcoin and cryptocurrency. I'm an investor, so it's not going to get me one way or the other in a product but I actually added some exposure to Bitcoin for the first time in some bit here. And Frank, I love this here. What's your read?
Yeah, I mean, this is really pretty. right? I mean, I don't know what else you say about it. We've got a pretty clear window into that 60K, right? I mean, we've been at all of these prices, so anything could act as resistance. But the great thing about the development over the last couple of weeks is we now know where resistance is, right? We gave the people an opportunity to sell, to take profits, whatever, and they were adding exposure. Tim's adding exposure. Old Money Homes is getting involved for the first time ever. And so when you look at this technically, there's just your eyes are drawn immediately to 60K. Not to say, I can guarantee it's going there. I wish I could. I would if I could. But why isn't it going there? I can't come up with any logical technical reason why we aren't having that conversation in the not too distant future with this breakout. I mean, I really think you have to like the technicals here.
I think it's in play. I mean, I definitely think it's in play. And obviously, Matt, you highlighted that intraday chart. This level that we just broke out of here this morning was key intraday level. So we got to call this a breakout here, correct?
I think, yeah, technically, I do think you have to call it a breakout. You are technically confirming above both the breakout channel at 50K plus the intraday breakout channel at 50K and change. Let's get that exact number there. Give it 50K 500, and then you not only saw that, but over the course of the last couple hours, look at that. You've played a little bit of defense as the market broke out, then consolidated above the breakout channel. So, yeah, I do think the evidence is certainly there and certainly supports a confirmation technical breakout. And Frank asked the hypothetical, why not 60K? Behavioral, economic, fundamental, and random wind changes aside, there is no reason technically why 60K is not the target.
I agree. It feels like it's just staring at you right there from a left of the chart perspective, psychology perspective. It was also that level that everybody was anticipating the breakout that ended up becoming a false breakout back there in April and brought it back down into the range. So I think definitely 60K is in play. We'll see how it plays out. Obviously,
technically, you had a moment this week, technically, where it could have got shaken out and could have got out of control. You had multiple tests from an intraday perspective against the backdrop of some daily support levels right here at about 46,500. These days right here, you clip that support level, you couple that out with the daily chart right there, there's nothing there. It comes right back down. It holds. The last 3 days, higher highs each day. Higher lows each day, breakout day towards the high, intraday, playing defense above the breakout channel. Yeah, you got to like it.
Yeah, I definitely like it. All right, let's move quickly into stock talk. Only got a couple items, I believe. Broadcom had earnings. I have one corporate item. Matty, where do you want to start here? Broadcom earnings?
I'm rapid fire this. So AVGO, Broadcom comes out, reports $6.96 versus $6.85 expectations. So a slight beat on EPS numbers. Revenue numbers came in line, $6.8 billion versus the expectation of $6.8 billion. This is as boring as it gets for Broadcom.
Yeah.
I'll tell you what's not boring, though, is that chart.
No, the chart itself is not
boring at all.
That chart's look like a weekly breakout potential above 500.
I mean, this is what, I've been watching Broadcom for a breakout for a while now. And as we're getting into earnings, I was like, please, earnings, don't destroy the chart, right?
You want boring earnings.
I want boring earnings. And the way the candles developed on this weekly chart, I personally think that we use this weekly chart as the guide going forward on Broadcom. If we can take out this weekly high next week, I'm going to call that confirmation of the breakout of a long-term trend. This was one I had, to bring up in my charts, but since we've got earnings going on, I mean, I love the way that this has played out so far. Have to break that weekly high, in my opinion, to get confirmation. But I really am excited about the chance of that happening.
I agree with Frankie, and obviously you're going to have a little volatility here on a day where they do report earnings. But if you look at the previous couple days, had a little front-running behavior on the breakout before earnings, little snapback bull flag that actually tested the breakout channel right there at 490, confirmed with today's earnings. And so you look at it on a daily chart, yes, wick nightmare here, but overall, you look at that weekly, you look at the weekly channel, you look at the build of support coming into that weekly channel, you look at that as a potential breakout, followed by that with confirmation with continuation above 500. yeah, this is a stock that has this potential in it.
Mm-hmm. Yeah,
It's been stuck in mud. And I don't have the philosophical viewpoint that you don't miss breakouts on Broadcom, but you got it. But if you're looking at semiconductors and you're looking at a little longer term here, because Broadcom's not a great swing trade stock,
a little longer
but
term
you look
play.
at you look at a little longer term play like a position style. You gotta love the potential breakout with the backstop of the daily momentum and a positive response to earnings. And honestly, Frankie, scenario where it's cheap risk.
Yeah.
You're right here about the breakout channel. Obviously, stop loss placement starts underneath 190. And so it's just not 190. No, not 190.
If we could go back in time.
490. 490. But you just, stop loss for me just says, okay, if you're wrong, you want to get out if it's stuck in mud again.
Sure.
Oh,
Yeah.
I like it. It's got a chance. I like it.
I if we can get this confirmation, I do like it, and I think that it's a fairly slow, right? Because like you said, Broadcom is generally, doesn't mean it won't be, but generally is not the greatest swing trading stock. But if we get the breakout in tech, we get the breakout in semis, we get the breakout of a year-long range on Broadcom, I expect some pretty decent price appreciation on these guys personally.
I agree. I think it's a candidate for a bull call spread potentially.
I think it's a really good candidate for a debit spread. I do.
For debit spread, something like that. All right.
Next, let's go to DocuSign, DOCU, DocuSign. DocuSign also has a little bit of a weekly channel breakout to discuss. Get Coach Frank's take on it here in a second. Unlike Broadcom's fairly boring report, and again, boring in Broadcom is not bad. That's not bad. But DocuSign comes out with 47 cents against the expectation of 39 cents. Good, healthy beat on EPS numbers. Revenue came in above the expectation, 511 versus 487. That did represent a 49% increase in revenue year over year for DocuSign. Docu was not done there though. They also increased guidance both quarterly and yearly, just a hair there. But officially, a beat, and an increase in guidance does get hat trick treatment. And DocuSign does get the official tackle trading hat trick for a beat, and an increase in guidance, threatening a weekly breakout channel. Frankie, what's your read?
I really do like these guys as a breakout too. The old three-peat, right? The beat, the hat trick, yeah. The hat trick.
Not even a cheat.
Not even a cheat. I wouldn't mind maybe one or two little inside candles up here at resistance, give folks an opportunity. My only hesitation is because of today, basically, we're running, not hot, but a little hot into that resistance level. I think if we could get a little bit of inside candles, we could have a little more interesting stop loss placement. But to be quite blunt, if this breaks those highs, if someone said I'm taking the trade, I'd be like, I'm not getting in your way. I promise you that. I really do like this as a breakout candidate.
I do too. And again, the natural conversation we have as traders on a breakout is, do you have to concern yourself with the wick? Right? That's the number one thing when we're looking at something like this. We're looking at the breakout channel. Do you have to concern yourself with that wick? Well, today confirmed you do.
So exactly. And this is why, a couple inside candles would be so nice, right? Because then we have, we know we want our stop below the breakout channel, but it sure is nice when we have some sort of support on top of that, right? At least in my estimation. So definitely, I think worth going into the watch list. I wouldn't fault anybody for playing the break if it happened on Tuesday morning. I'd love to see a little bit of consolidation so I have a better idea of stop loss placement and thus risk to reward. But I think that's a watch list worthy chart if I've ever seen one.
I agree.
Yeah, and in simple reality, it's been choppy over the last year. Hasn't had a lot of great trends, but this is a stock that can absolutely fly when it wants.
Yep,
100% agree.
Right, and that's where and when you're looking at that again, it does not have great supporting breakout evidence. Look at the breakouts here, kind of choppy, fadey, choppy, fadey. Really, breakout there. Look at the strong move. So it doesn't have a lot of great evidence. But again, given the opportunity of Docu having the ability to fly, I do think it's interesting.
Definitely. Got to kick that one on a watch list. No doubt about it.
All right. And that is all I had for earnings roundup.
I only got one, and it's a really quick one, actually. Give me Fubo if you can. On Tuesday, we held the Queen's Court, and Coach Marcus submitted Fubo as a pick. One of the bits of the analysis was the states were giving them regulatory approval to put more, online gaming into their different states. Arizona followed Iowa from earlier in the week. Got another state to get on board to Mark's thesis. I just wanted to highlight that Arizona regulators are letting Fubo offer mobile wagering in the state, second state to give them approval. So thought that was interesting. Saw the note in the news and kind of follows Mark's theme from earlier in the week. So I just want to give everybody that update. But last thing we're going to do here today is go into Coach Frank's charts. And, it's one of our most popular segments each and every week, Frank. People love it. You bring up charts you find interesting, and we get to geek out on them. You're up, man. What do you got today?
All right. Well, exciting times. I want to start with something in material space. We talked about the gold and some of the metals. But we're seeing a lot of real interesting things in some of the specialty chemical companies and the packaging companies as well. Packaging company International Paper, IP, is something that I find really interesting going into next week. I actually thought it was an interesting breakout candidate coming into this week. Don't mind that it's taken a little bit of time to get up and running. That doesn't bother me at all. We even saw a little weakness on the intraday here today. And as you can see, buyers quickly gobbled that right back up. What I like about these guys, really clean entry. I think it's actually the same exact number 3 times at 60.33, if I'm not mistaken, if I remember right. So a very clear level of resistance. We don't have any weekly moving averages or anything like that to maybe get in the way of the breakout. As a matter of fact, if we break out, we're actually breaking above the 20 weekly. For those of you who are believers in that having a potential impact. Got a real clean window to up into probably around the 62.50 range, where we do have some old history of support, obviously a resistance pivot. And then beyond that, obviously a pretty clear window from that point to the next. So obviously that's a little bit further away. So I'm kind of looking at that first window into that 62.50 range, but should be a pretty easy trade from an entry point of view. I think the targeting is pretty easy. I think we'll have some options from a stop loss point of view to make risk to reward work. You are seeing similar strength in things like West Rock. I just prefer this chart, even though West Rock looks very, very, very similar to
WRK.
it. Maybe WRK, maybe just a little bit ahead of it, but very, very similar type of a chart. Up top, you've got Lynn, you've got Sherwin-Williams. And so we're seeing, not all of the chemical companies, but certainly a lot of interesting charts on both, kind of the, middle reversals to the higher end breakouts. I think there's some really interesting opportunities in this space, including PAC that you just brought up there, Maddie. And so what do you think, Maddie? IP?
When you're looking at this, especially when you're looking at IP, I'm very interested in this potential reversal here. I like the characteristics. I like the downward movement in price consolidation, tried. Downward movement in price, quick downward movement in price consolidation, tried. Downward movement in price, nope. We're going to eventually hold support. We hold support. Point 1, support holds. Let's go reclaim those moving averages. Point 2, same thing over here. Now let's consolidate and give us a clean entry. That's a reversal. It's a clunky reversal characteristics, but I actually really, really like it. I like the changing dynamic here. I like the story over time that's being told on the chart, and I like the potential breakout because the potential breakout destroys all of the analysis, and so I like it. Yeah, I like IP. If you are looking at at this sector and you're looking for a potential, give you a little bit more strength type analysis instead of reversal, I do think PAC is your choice.
Yeah,
really kind of like
sure.
I really like the consolidation at the top of the chart. You can kind of see the cleanliness of the potential breakout, and so I do think PAC is if you're looking at breakouts, 52-week highs, trading momentum, into strength, I do like PAC, but I do like the reversal characteristics here with the very clean trigger on the confirmation. Yes.
So yeah, and that'd be an interesting debate between PAC and IP, right? A lot of it probably comes down to you as an individual individual trader.
And that's why I brought a PAC instead of West Rock, because they're both similar. Right. Give a different view for different types of traders type thing.
PAC's got the strength. IP's got the reversal.
PAC was one I wrote down PAC to discuss for the scatter report meeting. I didn't have IP because I was just scanning on daily charts, but this one looks like a really good weekly and daily type reversal.
Interesting reversal characteristics.
Anything you'd like to add, Tim or Cody?
No, I was looking at all those different stocks as well, and kind of you guys' thoughts clarified it for me, because what the question really I had for you, Frank, was why not WestRock? And you guys kind of answered that. They're very, very similar in characteristic. You like the IP play a little bit better. It looks a little cleaner, and probably targeting is probably a little easier now that I look at the charts.
Targeting. Yep,
Mhm.
It's the targeting that made
I
it
wouldn't
stand out to me.
fault anybody for saying, "Hey, listen, I like the WestRock reversal."
100%.
I like the WestRock reversal too.
It's really nice.
I just kind of feel like if one works, both work.
Yeah,
I would agree with that. And so the tiebreaker for me really was, as you brought up, Tim, the targeting.
Mhm.
I felt the windows were a little bit cleaner in space for whatever that is worth on it. But yeah, I wouldn't fault anybody for moving into WestRock or PAC. I mean, it's nice when you're seeing an industry group having similar bullish signals, right? Even though PAC is much different, that's still a bullish setup, and so it's it's always nice when you can kind of get everybody on the same page, right?
Well, even though Ball is the biggest market cap company in this space, and even though I don't like a trade on Ball's current momentum is going to do nothing but support.
I mean,
at it with the IP, WestRock, and PAC.
Yeah, Ball's awesome. It's just its trade was last week, right?
Yeah, exactly.
If you were going to take that little high base coming out of that old resistance, it's a little tough to. Yeah, it was a scatter report last week, and so this week it's like, well, great, but dance at resistance. There's other opportunities, and hey, hopefully it just blows right through resistance and helps its friends out, right?
Yeah, because there's still a lot of people in that trade. That trade's in process.
For sure. Yeah, that's absolutely. All right, I got another one for you, Maddie. This is also one that we had in the scouting report, I think in the stock report last week, and that is ARRY. This is a little newer semiconductor. Doesn't have a long history, but the history that it does
They're more solar, by the way.
Oh, are they? Okay.
They're more solar.
The solar side of things. What I really have liked is I really like the grind. Think about that real estate chart, right? Where you have that grind at the top. It just doesn't want to break, but it keeps playing defense and kind of lulls you to sleep a little bit, right? And then one day it decides it's going to break. Now, it could break the floor, right? Which would completely invalidate everything I'm going to say from this point on. But if it breaks the ceiling, if we break through that resistance, what I really like about this is, we've got the good development in the last few weeks, but we really have, because this is a relatively new stock, it's only been around, IPO'd last October, something like that, if I remember correctly. We've got a pretty clear, we don't have a lot to worry about from old resistance. Yeah. We've got a falling 200 that's newly developed. We have an old floor in around 24 and change. We've got the IPO low price up at 30. That's a ways away, but we have a pretty nice window that we can work with. So even if this is one of those that it breaks out and I'm not quite sold, or I miss it because it breaks out and has a huge candle, there's still a really nice trading window in here.
I'm sold here. I'm sold, Frankie. Yeah, I was sold last week. I don't care. Consolidate another week as long as you don't break the 9. I don't care. I like the evidence building into it. And again, it didn't break this week. It didn't break this week. I don't care. It still fits the same narrative. You got momentum coming into it. I didn't need this week to confirm the $20 significant whole number, but if you did, it certainly did that this week. $20 is absolutely going to play a role. Market order above $20. I just kind of feel like above $20 makes a lot of sense. And Frankie, you don't have anything until you gap fill at north of 23, which is a minimum of a 15% movement on a stock. Yes.
Can I add something as well?
Absolutely. Go ahead.
This also follows an IPO pattern that happens quite frequently, when IPOs come out and they tend to drop and then they find their bottom. And I really like the pattern that we're seeing on this, is that this as an IPO stock, as Frank said last October, where it's kind of found its ground. And now that it's found its ground, I like the chart itself as a potential entry, because following that old IPO pattern, now this shows a great entry, not only just for a swing trade, but even for a longer term investment, that this might show a bottoming out where it's grounded and it could be useful in the future.
And
Yeah.
I certainly agree with that, but I would have to do a heck of a lot more analysis
Well,
on the
definitely more
fundamental
research,
side.
but adding the
Because
technical
there
analysis.
are, no, I'm with you. I'm just saying there's some really good fundamental companies that have growth potential in the solar space. And so
Yes.
like, it's just a lot of competing evidence. This to me is more pure technicals here.
Oh yeah, definitely off
I
technicals though.
love the technical breakout at 20, and again, it's for me, it's just opportunity. And when you have an opportunity where I mean, and I'm nitpicking at 23, Frankie. I'm
Oh, yeah.
nitpicking. 25 makes a lot of sense. 20,
Mhm.
Getting into 26 makes a lot of sense as
The
well.
200 makes a lot of sense.
And eventually getting into absolutely. And so when you're looking at that potential breakout at 20, the opportunity is into 23 to 25. I mean, even if you want to get a stop loss underneath the base at 19, you still got a very decent reward to risk ratio.
Oh yeah, absolutely. Risk to reward should be great on this trade. What really, however you're going about it, right? Like I said, where
Yeah.
you're targeting to, you're going to have some nice stop loss options. I would like to on something like this. One thing that it might just be just a me thing, to some extent at least. But I would hope. I don't mind that they didn't break this week at all. To be quite honest,
Doesn't bother me at all.
I'm kind of glad that they didn't. But what I would kind of like them to do is make up their mind pretty soon,
Now
because I
break.
love that they've been
Yeah.
riding above the 9 all this time.
Yeah.
I would rather them not have that pullback. I mean, the breakout would still be legitimate if we had, say, a pullback to the 20,
It
and
changes
it would
though,
change
doesn't
it
it?
for sure.
Yeah.
It would change that analysis. So, I think this one is one that probably, maybe it doesn't have to be next week, but it needs to make up its mind relatively soon for
Listen, at
this
some point
particular
it's got to
pattern.
change the pattern though, because at some point, either one, you're going to get so tight against that 9 to that $20 significant whole number. It's got to do something. So
Yep.
I don't mind the consolidation here at all, Frankie, but I'm kind of like, let's get going though.
Yeah.
Yeah.
Let's do it.
Yeah.
Because if you
Breakout.
retrace here, all I'm going to see, and again, I'll still like the $20 breakout, but all I'm going to see is nasty chop.
It
Yeah.
just it adds complexity that you don't need. If it breaks now, it's a simple trade.
Let's go.
We like
Break.
simple trades.
Yep.
Absolutely.
Yep,
Absolutely.
exactly.
Next,
It's
Frankie.
a real easy trade. All right, let's look at somebody flying higher, and that's eBay.
eBay action, huh?
Little flag following a breakout.
Little flag following.
eBay's on my radar too, Frank.
So
I
I brought this one. I figured this might be a Cody one. And in honor of you being here with us today, Cody, I'm going to throw this one to you, but nothing crazy on my end with eBay. I mean, they've been just on a monstrous tear, right? I mean, it's been an impressive run for eBay. Little flag into that 9 EMA. I think, but just very overgeneralizing it maybe a little bit. Coming in above today's candle on the Tuesday open. Expect this trend to continue. Probably, again, it's hard because we're targeting at the top, but just looking at the way that they move, I don't think, asking them to approach that $80 is a tough sell for me off of this little flag. Cody, what you thinking?
I love it. I think the entry is also very easy. You have the today's close, depending where that is, with yesterday's close with that wick that we have. I think the entry is very easy going into that. You have that nice line coming down off this overall flag. I would call this more of a flag versus a retracement. I think this is a pretty easy chart to see from where it broke out before and where we can enter now. And I think our risk to reward can be pretty easy. We can go right below 76 to get our overall stop out if we need to. This is a clean chart. I really like it.
So, and since this is on your radar, I'm just kind of curious from a targeting point of view, how would you be targeting this guy? Because it's always fun to target him at the top, right?
That's the question though for me, is the targeting. So I'm curious.
So targeting is this also, if you look back at some of the previous moves that it's had, pay is pretty easy to put in place. Is that every time it typically has a move, we're looking at somewhere between 10-point move or 10% move each of these pay ranges. So I think you could easily target an 80 as a T1. And then from there, I think you're looking somewhere at like 82 or maybe 82.5 because of the pay ranges that we've had. And Matt, if you could actually back out a little bit more, there's a lot of pay ranges that you can look at all of those different times that it's moved, that when it moves very well. So we can look at those 10% moves and estimate that if we get another one of those in a continuation where we do the full average on it, 80 is actually pretty conservative.
was
We
gonna
might
say that.
even go, what's that?
I was going to say that because if you're using pay analysis, doesn't that lead you to more like 85?
Exactly.
Yeah,
That's what I was gonna say. 80 is pretty conservative. You can get as far as 85. So this is a really good chart, and I really like how it did this little break and this little bit of pullback, because if it were to continue with those moves, I think you can get a 10% move on this chart over a course of a week.
It definitely moves. Yeah, and I am pretty notorious. My target one is always really wimpy. Just ask Matt; he reminds me of that pretty regularly. I always want the opportunity to, kind of a big scale out guy, and so I always like to scale out at target one. And my general philosophy is make target one as easy to get to as possible. And maybe that's just a me thing, right? But yeah, I think we can absolutely target it, and 80 would kind of be that target one zone for me as well.
For you.
The yield is 7 to 8. Easily gets you into 82, 83 first target, but you have slowing momentum in your current trend that you have to take into account. You discount potential average yield. You come down to the significant whole number, which also supports Fibonacci extension. That is $80.
So 80 by 82 kind of is where you're heading.
I would target 80 by 82.
Yeah,
that's what I said. 80
Maybe
by
83.
82 is what I got.
Interesting find there, Frankie, on eBay. All right, what you got next?
All right, let's look at your brother from another mother, D-Dog.
D-Dog. All right.
I see what you did there.
See what I did there? Yeah.
D-Dog to D-Dog. Let's go.
Brother from another mother. Another little high base breakout, kind of like Pack, right? Where we, kind of, hanging out up at the top. These guys have been doing this little dance, right, for a little bit of time. I think they tried maybe on the intraday to at least knock on the door here today. I don't believe they did enough to at least sell me, but they are very, very close from a entry point of view, at least in my estimation. Obviously, the trend is, speaks for itself, right? The momentum has been very strong. We had that big pop on earnings, and me, I don't know if Matt didn't tell me how good their earnings were, and they're not in my long-term portfolio. I don't have any idea what their earnings were all about, but the positive response is what I truly care about.
Thanks for the trust, Frankie.
Listen, you're my fundamental guy. As soon as you lose
Thanks for the trust.
As soon as you lose it, I'm just purely a trader. There's no more.
So as soon as I lose my ability to analyze the stock, you're going to stop caring about fundamentals?
Listen, you and Greg are the two people I listen to on fundamentals. And if you guys aren't giving me the info, it goes into the trading bin, which I am fine with that. But
I respect that.
The response is what I care about from a trading point of view anyway, right? So whatever it was is whatever. Little bit sideways in some ways. These guys, well, it's not a one-for-one correlation. In some ways they remind me a lot about Team that we talked about a few weeks ago, that had that big pop on earnings and just took a little bit to kind of clean up, I guess, and get up and
breakout
running
right there. Boom.
Yeah, exactly. And so my expectation on D-Dog is fairly similar. We need to take out this resistance level. It should be a fairly clean entry. We're going to have multiple stop loss options, whether we're going below today's low, below the 9, depending. I mean, you might be able to grab the 20, depending on how you're targeting this thing. Just thinking in ease and convenience. I mean, these guys seem like, if they break this 140, man, they always go to 150, right? So that's
if they break 140, I guarantee it's a 174.94.
See, there you go. At least
it's 1 to 1, right? It's
at
one time. It's did at one time. That's how it works, right?
So exactly. Yeah. But we have a lot of clear air above us, and 150 seems like a very fair starting point. I don't think it has to be the ending point for your targeting, but I do think it's a very reasonable starting point. Heck, we could be, huge wimps and try to get one ATR, but even I'm not that wimpy, I don't think.
I got a question for you to clarify on this.
Popular trading. Yeah, go ahead.
D-Dog, if we can here, and give me an intraday chart, and either one of you can answer this for me. But my only hesitation is I see kind of an upward wedge where, like, the other example you had a very clean horizontal chart. It was a little cleaner. Do you see 140 as that horizontal resistance?
I do.
Okay.
Yeah,
I do.
I would agree. Yeah, I mean, it's not quite as, maybe textbook. I think Team would have been easier to put in a textbook.
Sure.
But I think the general characteristics are close enough, good enough for me, I
Gotcha.
guess, if you will. But yeah, I think that
Here, I'll
140 is
clean
where
it up
starts.
one for you. If you need clean, get into it.
Into it.
Got a nice clean breakout. You really don't have to worry about the earnings gap there, but there's a pretty clean. This space is starting to solidify itself, Frankie. I like a lot of stocks that are setting up in this space.
Another good find.
Unity Software, Snow's starting to solidify itself a little bit, following a positive response to earnings. I just took a quick peek at Unity Software. Team was on our report a few weeks ago on the breakout. This space is starting to heat up a little bit, and that's without us talking about the big dog of this space, and that's Salesforce.
Yeah, and that.
So I like the breakout here. Datadog's one of the more popular trading vehicles in this space. I think above 140 makes a lot of sense, actually.
Mm-hmm. Interesting find.
Tim, did we sell you?
Yeah, no, that's my only question. I saw a little bit of wiki nonsense on the intraday, but if 140 is that clear level of trigger,
and again, there is some wiki nonsense underneath 140, but again, it gets clear above 140.
Mm-hmm.
So
yep, that's what
wiki nonsense just means you got to get above the wiki nonsense.
You got to clear it out. Yeah, that makes sense. All right, very good.
Exactly. All right, and there's one in the chat. I know we're starting to run out of time, but somebody, Smooth, brought up Walmart in the chat. I thought this was an interesting one. I figured we'd probably be talking. It's not one that's really got my attention, but I think it is probably one we will be talking about in our scouting reports, because just because it's not my type of a stock doesn't mean
it will get vetoed in approximately 1 second.
We always talk about Walmart. Walmart's notorious for not being a great swing
Let me
trading
put it like
stock,
this.
right?
I'm going to preemptively veto because this is not a step system swing trade.
Well, no, absolutely not. And Tyler, I know you're not watching, so I can't wait to make fun of you for bringing up
I can't
Walmart.
wait for Tyler to bring it up.
I can't wait for you to bring up Walmart.
I will say on Walmart, the weekly chart, and again, most analysis on Walmart should start on a weekly chart. The weekly chart looks like it's solidifying itself. I like the weekly chart here on Walmart. You see that as a little bit of a breakout from a month ago. Well, what did it do over the last 2 weeks? Tested that channel. I like this from a weekly perspective. But swing trades, I mean, you got to be targeting certain things. And
exactly. And I would counter if you're in Walmart, that's much different than trying to get in Walmart right now. I would.
Yeah, if you picked it up at 146,
if you bought it, because it bounced like right off of the 9,
and a slap
off of
on the
that,
back.
and good job for you. So I don't think anything has changed. I think, if you have traded or moved in on this pullback, or, sat through got in on the breakout and sat through the retracement, I don't think your analysis has changed at all. I think you're still looking at working towards 152. I do think that that's probably, the most likely thing to me is just to try to trade it from here. That would be difficult. But, you look at this thing on that weekly, it looks like, hey, it's not too far down the road. We could maybe be talking about a weekly cup and handle, right? So I do think you like it. I think it does want to test that 152 zone of resistance. If I were here, I'd be okay, I'm cool with it. But again, I would agree.
But swing traders aren't going to be looking at 149 to 152 and be like, hey,
exactly. It's just not the swing trader in me looks at it and says, well, I think it's going to 152, but there's nothing to do with it.
We're going to go. Swing traders are going to go find that same $3 movement on a $22 stock.
Yep, that's right.
Yep.
Like your breakout. We already did your breakout of the $20. What was the symbol?
ARRY.
ARRY.
Ari. Yep. Ari's an interesting one. All right, Tim, you gonna let me have one more?
Yeah,
one more.
Oh, you're the man, Tim. I knew I could get that by you. And this is just another high flyer, and that's TPX. Who doesn't enjoy a quality night's sleep on their Tempur Sealy International bed? I don't know anybody who does not. These guys.
I was trying to find a sarcastic comment. Yeah.
Right. This is a segment that's brought to you by
Tempur.
You're almost doing a plug for them there.
Exactly. Well, listen.
Product placement, marketing is 101.
Who's to say I'm not only a client, I'm also the president. Maybe you never know. But what I do know is this is a really pretty looking little chart. We recently broke out of a weekly range. It would have been real tough to trade that weekly breakout just because we had that big pop on earnings and just choppy. But what we've seen over the last week and a half is this consolidating development with that rising nine that you and I and Maddie and Tim, we always are looking for that type of development. Very clean entry on the breakout side of things. Again, a high flyer, so we don't have any old resistance to get in the way, which means our problem is, it's a good problem to have, right? Well, do we target it to 48 by 50, to 50 by 52, right? I love having those debates because that means there's nothing in the way to scare me, right? And so should be a pretty clean entry. Again, I would like to see it get that springboard off the 9. I would prefer that than to say, give up this little fight. It's okay if it does, but it doesn't hurt to ask for exactly what you want, right?
I think the evidence is here. Yeah, I think the evidence is here. You got a nice consolidation. It's rode the 9 the last 3 days. You pop here today. You certainly don't like it if it violates the 9 because it changes the pattern. And then you just got to wait for the breakout. But the potential on that breakout is literally here. You're staring at a price of 45.98. The breakout channel is 46. It's just a matter of triggering. Do you want to be aggressive? Do you want to be conservative? Do you want to wait for a close above 46.12, or do you want to wait for a close above 46? I think those are all subjective to the trader. But either way, I don't care. It's a legitimate breakout with a clean trigger.
Yeah, it's got a swing trade set up here for that. Yeah, I agree with that. Yeah, the intraday trigger there is really all you got to determine, and then build a plan out for your targeting. Probably for me, 48 by 50. By the way, it doesn't seem like a huge flyer, but
everything is made up. It's breakout and trail stop.
Trail stop that one for you.
Yeah, I say I would go the other way. I would basically target 1-to-1 and target 2 at 50. So again, it's all subjective on your targeting.
Target 2 is absolutely 50.
We just want
100%.
My rules when it comes to targets are pretty simple. Does it make sense, and does it make sense for you? Right?
Yeah.
Is 50 a crazy number? Probably not. Right? But if I'm the dude that's moving my stop loss up on the hourly chart, it probably is a little too far for me. Right? And so whenever you're struggling with targets on things that don't have clear targets that really stand out to you, ask yourself those 2 questions. Does it make sense? Is another trader going to say, yeah, I get it? And does it make sense for the way that you trade? Because it doesn't matter if it doesn't make sense for you, right?
Wherever your target, between 48 and 50 is fine, but 50 has to be a target.
I believe so.
Yeah.
Frankie, thank you for bringing these.
Thanks for having me.
Love the conversation here today. That was awesome. All right, guys, let's start moving into the end of our show here, the end of our week, and getting ready for our scouting report meetings. We still got a lot to do before we wrap it up for the week, no doubt about it. But then we do have a 3-day weekend, Matt. Plans for that as well. Matty, final thoughts for the team out there.
It's been a fantastic week hanging out in the halftime report. Such a pleasure to be able to do that every single week with Team Tackle, and look forward to doing it again next week, but not on Monday. Only on Tuesday.
We will be on Monday.
The rare Monday. And as traders, are you guys like me? As traders, you're like, oh, the market's closed. I am doing nothing that day.
On Monday?
I am so lazy on Monday holidays.
3-day holidays for me is I do nothing on Saturday and Sunday, and then Monday is where I do my prep for the week. So I'll be doing like my weekly sector rankings and all that kind of stuff. So a little bit of stuff on Monday to get prepared.
He'll work 10 minutes.
Yeah, 10, 20 minutes maybe, but a little bit, yes.
So you won't be as lazy as me, but you'll be really lazy. I got it.
Yeah, exactly. I shut it down, Frankie. Like holiday, I go on holiday. I shut it down. But certainly we'll be aware of all the other markets that don't shut it down, because just because equities are down doesn't mean currency's down, doesn't mean other instruments are down, doesn't mean crypto's down. But for the most part, Frankie, yes, I absolutely shut it down and try to spend time with family and hang out and whatnot. But no, as a slave driver at Tackle Trading, I expect every coach to show up on Monday and get ready for the team.
There you go. All right. By the way, young man, Cody, is wonderful.
I also saw Frank and Cody both had nothing to say on that.
They had nothing.
I got a fantasy draft on Monday.
I'm just thinking fantasy with football season starting. I got college football starting. I got
both of them are like, yeah, but then you just scheduled the Tackle Trading fantasy draft for Monday, and like
the laziness still includes some analysis. It's not analysis.
Final thoughts. Team Tackle, have an absolutely fantastic 3-day weekend. We will absolutely see you on Tuesday. Podcast will be there on Monday as always, but we will see you in the halftime report on Tuesday. But again, Weekend might be here, but that doesn't mean we don't have things to do as traders. And as traders go, it starts with doing our weekly routine. And our weekly routine is very, very simple, preparing for next week. We do that at Tackle Trading by checking out the newsletter. Coach Gino does a wonderful job ranking all the sectors, giving you the context over those sectors in the newsletter, talking to you about the upcoming key events that may throw a little bit of cold water on the analysis to a certain extent, but making sure that you as the trader are prepared for the market next week. And then obviously what we love doing after the halftime report here on Friday is we get to go hang out in the Skyline report meeting where we rank all those sectors, rank the market indexes, rank the currencies, rank the commodities from a scoreboard perspective, and then get those Skyline reports ready. The option report, the stock report, they have been on fire in recent history. The commodity report brought to you by Coach Mark. So we're going to go get those reports ready. Team Tackle, enjoy those reports as we release them tomorrow for next week's trading week. And as always, Team Tackle, safe, nothing but love from us at Tackle. Have a great weekend.
Absolutely. We'll see you guys on Tuesday. Have a wonderful weekend.